Hey there.
Hey,
How's everyone doing?
good. How are you?
Good. Hey, Margot. Hey, John.
Hey, Michael.
All right, so let's get this on the road for everyone. This is our virtual legal town hall number four. As you know, my house burned down in the Palisades fire. Um, Brooks has a brother, and Margot has a uncle whose house burned down in the fire as well. John is Brooks' partner, and Margot, they all work at Cutter Law. John's family house burned years ago in the Northern California fires. So what I decided to do when we were going through all this weeks ago was to get someone I trusted and with experience, to help out the community. It doesn't matter if you're from the Palisades, but if you're involved in the Hearst or Eaton fire too, please spread the word here. So briefly, in the past we've covered a couple things. We're kind of do a redo right now because our first virtual town hall talked about insurance companies, how to make yourself whole. And now that people are starting to get checks from the insurance companies, there's been a lot of issues. And we can kind of go through that. But I think John has a presentation, but John Brooks and Margot, since you have this is the first time you've actually been on screen, if you guys want to briefly introduce yourselves, and then we'll just jump right in. And for the audience, I'm going to have to go in and out because I'm dealing with some insurance issues. So I'll be here on mute.
Thanks, Michael. We're really happy and to be able to help anybody we can here. Our hearts go out to everyone. We know how difficult it is from, as you mentioned, from personal family experience. And we really want to see what we can do to help folks get as full and complete a recovery as possible here.
And I'm John Rusas. For those of you who haven't been with us in any of the other three presentations that we've done, I come at this from a personal perspective, as Brooks and Michael mentioned, having lost a family home, and also from representing hundreds of fire victims ever since in the Northern California fires, currently in the Maui fires, and now here in Palisades and Eaton. And today I do have a presentation on insurance tips and tricks, and then we'll get into some third-party issues after Margot introduces herself.
Thanks for having us, Michael. I am Brooks's daughter. I'm Margot. I work with Brooks and John. I apologize, I haven't had my camera on the other sessions. I'm usually at home watching my insane toddler. So I would have done it, but you would have seen a lot of chaos. So today, because it's during the day, I'm at work. Nice to see everyone.
And we're going to definitely have time for questions at the end of this. So
Yeah, we're going to have questions. And one of the big things now before you guys start is everyone, not really regarding the California Fair Plan, but for those who had private insurers, they're starting to get their checks now with the mortgage company on those checks. And it's like, whoa, hold on, what do we do here? Because those checks are going in escrow accounts. So you guys take it over.
Sure. And Michael, I'll jump on that before we get into the insurance policies and some of the tips and tricks that can help you maximize your recovery. So when you purchased your insurance policy, your homeowner's insurance policy, one of the endorsements that probably was part of your policy is called a lender's loss payable endorsement. And what that is an endorsement that's required by your mortgage lender. And it says that if there is a loss of your home, if your home's destroyed in a fire, for example, the mortgage company that holds a mortgage on the property is to be paid as a joint payee on the check with you, and that the mortgage is to be paid off. This probably comes as a rude surprise to most people because most people don't look at all the endorsements, not when they buy a policy, nor read every single page of the deed and the loan paperwork that you took out when you purchased your home. It's most likely going to be in there. And what we encourage people to do is first reach out to the insurance company, ask for the entire insurance policy and the lender's loss payable endorsement, or whatever endorsement they're relying on for issuing a check jointly to you and your mortgage company. Right. I don't encourage people to use, legal terminology. I don't encourage people to say, give me your lender's loss payable endorsement, because sometimes it's named a little bit differently, and you want to make sure you get it, not play word games with an insurance company that sometimes plays word games. Then once you've got that, or as you're waiting to get that, reach out to your mortgage company and say, hey, what are you guys doing? How are you handling people like us and that were burned out and we've lost everything, right? We want to rebuild. We intend to rebuild. We just need to get to the point where we have the opportunity to do that. What is your program? What are you offering us? And they should put you in contact with their department that handles people like you that have been burned out and are in a situation where a joint check is being issued. There are options. The options kind of range by the individual mortgage company, mortgage lender. Some will apply the funds to a rebuild and work with you on financing a rebuild. Others, haven't figured it out quite yet. There's no California law that mandates they handle it one way or another. Lenders' loss payable endorsements have been used for a long time. But the first place to start is communication with your insurance company, communication with your mortgage company.
Thank you, John.
Okay, so with that, Michael, I want to jump into kind of the things that we promised, the basic information that we promised we'd share with you here today. And so you should be seeing first slide here is how you can reach out to us. We introduced ourselves. You can reach out to us by email at wildfire@cutterlaw.com. Online, our website is cutterlaw.com. And you can also reach us by phone, 888-285-3333. Reach out to us, let us know what it is you need help with. Email is probably the easiest way for you, so you don't have to sit on hold. People are sitting on the phone with FEMA, their insurance company. You don't need to add attorneys to that list. Drop us an email. We'll connect with you, get some information, figure out what it is that we can do to help you. All right, so today, where I'd like to start is, now you're getting checks from your insurance company. Do an overview, dive in a little bit deeper into your insurance policy, and talk about the kind of coverages that you have, so that you can understand how it all works together, what some of the coverages are you want to make sure are paid and that you understand are available. So the insurance policy is typically comprised of 4 parts. Sometimes these are broken down differently, but generally coverage A is going to be your dwelling. That means your home itself. Coverage B is going to be your other structures, things like fences, gazebos, in-ground swimming pools. Coverage C is going to be personal property. That's everything that you had inside the home, everything you had inside the garage. And coverage D are your additional living expenses or loss of use coverage. That's the stuff that's putting a roof over your head right now. And we'll get into detail now on what each of those coverages provide and how you can maximize your recovery. First things first, we touched on it at the beginning here, is ask your insurance company for a complete copy of the insurance policy. You want them to give you everything, right? The entirety of the insurance policy, because you don't know down the road what portions of it are going to be important. If you have it all at one time, you don't have to keep on going back and asking for more. So ask them for a complete copy of the insurance policy and your declarations page. An example of a declarations page is this on the screen. And what you'll see is the declarations page is a single page, sometimes 2. And it'll tell you in one place what the top level coverages are: your dwelling, your other structures, your personal property, your loss of use, and then some things that are not in play here. There's also typically a section which you'll see here where they list the endorsements that apply to your policy, so it helps you know whether you've got a complete copy of your policy. So I'm going to begin with kind of the most immediate coverage for folks, which is coverage D, or additional living expenses, which, as I said, is what pays for the roof that's over your head right now. People are asking us, how long do I have? How long does this coverage last for? Here we've got a declared state of emergency. So under California law, the insurance companies have to pay for your alternative living expenses for no less than 24 months, but it's subject to the insurance policy limits. And what that means is if your insurance policy limits don't last for the full 24 months, meaning that the cost of the place that you're living while you're trying to rebuild eats up your coverage D limits in less than 24 months, that's it. The insurance company is never going to be responsible for paying more than the insurance policy limits, even if it doesn't last you the full 24 months. But if you have a policy like some folks do, where it's all costs incurred, or a 7-figure or high 6-figure cost, you have up to 24 months to use that coverage. Okay, so the next question is, okay, I understand how long it lasts, but what costs is it that my insurance company is going to cover? Easiest way to answer that question is reach out to your adjuster, call your adjuster, send an email to your adjuster, and ask them for a list of all commonly covered items under your alternative living expense coverage. They, by California insurance law, they shall provide you with a list of those commonly covered items. This helps you and your insurance company be on the same page, and it gives you comfort that the things that you're incurring costs on, your insurance company rather, is going to reimburse you for that. Okay, so ask them for a copy. The insurance code uses the strongest language possible. It shall provide you with it. So your insurance company has to do this if you ask it for it. But you got to ask the insurance company for this list. Next question is, okay, what can I get right now from my alternative living expense coverage? If you are one of the folks who are living in the situation where your entire home was destroyed, you are entitled to no less than 4 months of living expenses by asking. So call, email, write your insurance company and say, hey, I want an advance of 4 months, 5 months, 6 months. Ask for more. They have to give you at least 4 months. It never hurts to ask. So ask your insurance company for an advance on the living expenses. If you're in a place that right now costs $10,000 a month, ask them for $40,000 advance, or even better yet, ask them to bill the rent directly to the insurance company, and then ask for an advance on other expenses that you're incurring, such as additional food, additional utilities, any additional expenses that you're incurring while you're living out of your home. But by all means, get that list so that there are no questions or no arguments about whether or not the costs you're incurring are costs that are going to be reimbursed by your insurance company.
John, can I just interject here? So what happens if you're a homeowner and you did not have fire insurance, or you were a renter, and so obviously you don't have fire insurance? Obviously you would have to go to FEMA. How do you get FEMA to determine what your cost of living is, and in helping you out in that way?
So I'll start with the renters. Go through the same process. If you're a renter, ask your insurance company for a copy of the policy. Let's figure out what is covered. Very often your rental policy will cover your personal property and provide for alternative living expenses. Figure out what's covered and immediately get going on your FEMA claim. There's a short deadline here. There's a March deadline for the FEMA claims. Get them the policy information. That's going to be part of the application. What's your coverage? Get that information in so that you can be in line to get compensation from FEMA as soon as you are eligible. For the people who are entirely uninsured, that's obviously even more important to get your FEMA application in now. There are funds that are presently available from FEMA. It's not much. It's not going to last you long, but it's going to help you defray the high rent costs, the elevated and inflated rent costs that people are currently incurring. It'll help you with a couple, 3, 4 months, maybe a little bit longer, but not much more than that. That's obviously subject to the political process, Michael, as we've been talking about the last couple of weeks. Write your representatives, let them know where you are, put pressure on them to step up and break the log jam and make sure that the political process steps up and addresses the situation that you're in. That's the only way that we're going to get additional funds for you is through that political process.
Yeah, and let me just add that because that's another question. In terms of making everyone whole here, if you're underinsured under the California Fair Plan, which most are, or if you didn't have insurance, people have been asking, well, do I have to take the hit myself? Well, hopefully down the road, if we all apply pressure to our, government leaders, that there will be some type of fund down the road here. Maybe if not on a city level, maybe Governor Newsom, maybe President Trump. But that's all speculation. But so no one can guarantee that. So just write to your local representatives.
Yeah, and then the next level there, Michael, is the third party liability. And this is going to be a theme that unites everything that we talk about today and kind of lies over top of all of it. Is whoever's responsible for causing the fires, and as you said, that's something that we're currently investigating. Nobody has the answers we need right now, but whoever's responsible for causing the fires, contributing to the magnitude of those fires, they're responsible for 100% of all of your harms and losses, and that includes the costs that you're presently incurring while you're living outside your house, while you're trying to maintain a reasonable standard of living, while you're trying to pay the bills, keep a roof over your family's head. And that is something in addition to the insurance stuff that my law firm has helped thousands of people with, is recovering from all of your harms and losses from those responsible for you incurring those losses.
And one last thing here to the audience, and then I'll shut up, John. Sorry to keep messing up your presentation. So everyone thinks that the original fire on the 7th in the Palisades was started by fireworks the previous week. Well, if so, there becomes a liability issue maybe down the road here, LADWP, because Santa Ynez Reservoir wasn't full. Maybe the power lines sparked another fire, and that's why it spread so fast. So the investigation is going to take time. So everyone just hang tight and let the legal process play out.
Yeah, and Michael, thank you for jumping in, because that's that is something that everybody's talking about right now, and that is front of mind for everybody. Right? Is what was the cause, and we're taking it kind of stepwise, right? Dealing with right now this insurance stuff, immediate sources of funds, while behind the scenes we investigate. So the next coverage, Michael, that I wanted to go into is coverage A for your dwelling, right? That is the coverage that is there to help you rebuild. You're going to see on your declarations page, there's going to be a section that says, here's your coverage A policy limits. But in addition to that, very often what you will find is that within your insurance policy, you have extended replacement cost. And what that is this is an optional additional coverage that you could purchase with most insurance policies. And it gives you an additional percentage of your dwelling coverage for the rebuild. So if you've got, let's say, $1 million coverage A for rebuilding your home, very often there'll be an additional 10 to 50% additional money to help you rebuild your home. Kind of the idea here is you, your neighbors, your entire community go back to rebuild, and you're all going to be doing it at largely the same time or in the same window. And we all know that supply and demand drives costs. And so if everybody's rebuilding at the same time, everything is going to be more expensive. That's what this extended replacement cost coverage is there to help you with. So an example to put numbers to the concepts, and illustrate how this works. Let's say your home was originally built in 1990, and at the time of the fire, it would cost you $3 million to rebuild that house. Beautiful house, and that's what it would cost to put it back together. But now we've got this surge that we're talking about. Everybody's there. Everybody's rebuilding their homes, from the small homes to the huge homes, and prices go up. Now it's going to cost you $3.5 million to rebuild that same home. That's what the extended replacement cost coverage endorsement is really there to do. It's there to help soak up or cover the difference between the $3 million limit and the $3.5 million replacement cost that it's going to take you. Now, sometimes people don't have this endorsement. It is optional. Sometimes this endorsement doesn't go far enough. Right? The insurance wasn't enough. You're underinsured to begin with. Inflation, the sudden shock of everybody rebuilding drives the costs up, and you don't have enough. Well, that is again where third-party liability comes in. Your insurance company covers as much as it covers. Now you have to go and get the rest of your loss back from those responsible for causing the fire or the magnitude of the fire and your loss. That's what we help you with. So an additional coverage that will not actually appear on your declarations page, but that is standard in all policies, is called code upgrades. And this is kind of going back to that 1990 house. That 1990 house, there have been a lot of changes to the mechanical code, the electrical code, the plumbing code, all of the regulations that go into a home. Those changes make it much more expensive to rebuild the home. And so this code upgrade provides an additional, sometimes it's a percentage, sometimes it's a fixed dollar figure, but they provide, this code upgrade endorsement provides additional money for you to rebuild your home. Now, we have heard that Governor Newsom and some of the other elected officials are talking about waiving requirements and permit costs, but there's still going to be code upgrades that you're going to incur additional costs for, and this coverage is there to help you defray those costs and maximize the amount of money that's available for you. One thing that is unfortunately a truth here is that some folks don't have enough money to rebuild, and so they are saying, well, what are my options? I've got this pot of money to rebuild. I don't want to rebuild here. I've had enough of California, the fire risks, the craziness, whatever the case may be. I want to rebuild somewhere else or buy an already built home somewhere else. You have that option. California insurance law requires that the insurance company pay for a replacement, a like kind, meaning you don't get to upgrade, but they got to buy you the same home in another location, or pay for you rebuild the same type of home, even if you decide to do it in another location, meaning another city, another state, whatever it may be. But the insurance company is required to value the cost of the replacement or the rebuild based on what it would have cost you to rebuild here at home in the Palisades. So now you're looking at this, you're weighing your options, you're considering going out of state. The question obviously comes to mind, well, how long do I have to make these decisions? These are big decisions. There's a lot of things I got to consider, a lot of dominoes that have to fall before I make a decision. John, how much time do I have to make this decision? Because this is, again, a declared state of emergency under California insurance law, you've got 36 months to either rebuild or replace your home. So your insurance is there. It is reachable for that 36-month period. Again, like everything else that we talk about here today, write your adjuster. Get them to confirm these things to you in writing so that you've got that peace of mind. My adjuster and I are talking the same language. We understand exactly what's going on, what the coverage is, and it's in black and white, in writing, in an email, in my inbox, that's the way that it works with my policy. Do it. Peace of mind, all of this getting in writing, the peace of mind is absolutely worth it. Now, some people are probably looking at 36 months and they're saying, I don't know that that's going to be enough time. Well, again, California insurance law requires that where there is good cause, the insurance company does have to give you more time to tap and exhaust your insurance policy benefits. Devil's always in the details. You see the word good cause there. And what good cause means in California insurance law is stuff that's outside of your control, meaning exactly the kind of stuff that you're going to run into when you rebuild. There's permit delays. I can't find a contractor. Nobody is available within 36 months to build my home because there's so many people. That's the kind of stuff that constitutes good cause for you to get an extension from your insurance company. If you're finding yourself heading that direction and you think that this is something you're going to be in for, write your insurance company, put it in writing, let them know what you're running into, and ask them to confirm in writing that they're going to extend your coverage for good cause. You want all of this in writing. None of it just, is understood. None of it is, well, if it's in the law, I'm sure they'll treat me fairly. Don't count on anybody to treat you fairly, least of all an insurance company. So now kind of going all the way back to the insurance policy, we've talked about coverage D, your living expenses, coverage A, your rebuild expenses. Next thing we'll talk about is coverage B, which is your other structures. Typical examples of other structures are things like your detached garage, the shed that you kept the gardening tools in, a gazebo, a fence, if you had an in-ground pool. Those are all other structures that have a separate coverage limit in your insurance policy. Moving on with coverage types, next is coverage C, which is your personal property. You have a separate coverage with a separate limit for all of your personal property. One of the things that you're probably talking to your insurance company about is putting together an inventory, which is a list of all of the things that were in your home. They can provide you a form. There's lots of forms available online. We can share a form if you write us wildfire@cutterlaw.com. It's just an Excel spreadsheet that helps you do that postmortem, go room by room, drawer by drawer, shelf by shelf, and take an inventory and put down a written list of everything that you had in the home. We also work with vendors that can help you through that process. It's laborious. It takes a long time, and it helps sometimes to have a vendor help you through doing that.
John, if I just interrupt here. So for everyone paying attention here, yesterday, the California Department of Insurance issued an order regarding personal property insurance claims that the companies now have to pay out 100% of the contents of personal property with coverage limits without requiring the policyholder to undertake the task of completing a detailed personal property inventory. So that's an update that just came out yesterday.
There's a reason, though, that you're still going to want to do your actual inventory, and that's if you have replacement cost coverage, as many policies do, you will be able to exceed potentially the policy that they're offering you, because they are obligated on the replacement provision to pay for a new item, as opposed to the depreciated value that they're using to take into account in the value that they're paying out on the policy on. John, thoughts on that?
So basically you're saying then, Brooks, that you should accept the personal property money, the 100%, but still go through the task of inventory.
Yeah, particularly with what you think you're likely to replace, right? Because you can establish that you replaced it and get that extra bump.
Yeah, absolutely. You know, with a possible third-party case here, you know, if you're going to sit down and do an inventory, if you're going to be forced to go through that time-consuming and painful process, do it once and for all time, so that you know, you don't have to go back. Sure, you're going to remember things down the road, and you can add those things to the list. But if you decide that you're going to sit down and rip that Band-Aid and go through the post-mortem, do it. It feels good to get it behind you and get that list so that it's done. It's off your back. You can move on, which is a large part of what our firm is here to help you with, is get things done. Check them off your list so you can take some of that weight off your back and get up to the top of the mountain. And Michael, you mentioned the Department of Insurance and its communication from yesterday. You know, my understanding is that the law is and remains that if you had a complete destruction, that you're entitled 30% or $250,000 without an inventory and payment within 30 days, that they are encouraging and pushing lenders or insurance companies rather to do more. But I don't understand yet that they're in a place where they've issued a reg that's requiring it to pay more than that. I'll definitely take a look at it, but my understanding is that currently where we are is encouragement, is guidance, but nothing that's replaced the insurance code section 10103.7 that says 30% no inventory. But you know, with the speed that things are developing, Michael, you may have seen something that I haven't come across quite yet.
Actually, you're right. I'm just reading it right here, and it says he's calling on, and you know what, John, devil's in the details, and you just caught it there. It said that they are calling on all residential property insurance companies to follow the lead of other insurers who are providing up to 100% of content. So it's not law yet, but that's what they're recommending. So.
Yeah, and that's one of the hard things that people like you are pushed into here, Michael. You've got so many things going on. You've got information coming at you, you know, like drinking from a fire hydrant. And you know, it's easy to, you know, have small things like that and wishful thinking in addition, it hits you. So you know, we're still in the place where if it was your primary residence and if it was furnished and it was totally lost, right now, write your insurance adjuster, say, hey, total loss, please give me 30% of my personal property limits, and you're entitled to 30% up to $250,000 within 30 days. The money should be in your bank account, not sitting in the insurance company's coffers. It should be in your bank account so that you can spend it if you need it or earn interest on it if you're not ready yet to do it. And again, that's no inventory, 30% up to $250,000 within 30 days. Still plan on doing the inventory to get the rest of your money. Still plan on doing the inventory for the third-party case to make sure those responsible for you losing everything that you had built in all your life are obligated to repay it, but get this money now.
Right. Let me just ask someone asked a question, John, because it's pertinent to this point here, which is, what if your home is still, and we'll get to the other questions after, but it says, what if your home is still standing? What AL can you get an advance for?
I'm sorry, what can you get advance for?
Sorry, ALE. Can you
Okay.
get if your home is still standing?
Yeah, if your home is still standing, you know, you're probably going to be in a place where you should, if your home is still standing, the question in my mind is it, yeah, it's still standing. And I mean like two walls, but no human being can live in this home. Is it my home is still standing, but there's so much smoke damage, and the place is impossible to live in? I really want to know the answer to that question first. But if your home is still standing, you can move in. Well, the ALE has at that point ended. If your home is still standing, but it's not habitable, meaning the smoke damage is so bad that you can't safely be in there, then that's going to be one where you're going to want to reach out to your insurance company and let them know why it is that you cannot be in that home, so that you can give the insurance company the facts they need to do the right thing. Because as a general matter, home's still standing and it's habitable. ALE has ended. You're now back in your home, and there's nothing that the insurance company is going to easily part with for your additional living expenses.
So John, how do you fight this then? If all of a sudden, because I've had a lot of neighbors contact me, your home is still standing, maybe one of the only homes around, but it's just soot and ash. You go in there and you get headaches, and you have this great policy, right? Where your policy limit is like for loss of use is like, let's say $1 million. Okay. What's going to happen after 6 to 8 months down the road, once the remediation comes, and how much do you trust for the remediation to make that house clean again? I mean, does it all have to be gutted, or are we going to see people moving back in there, and then 5-10 years down the road have these health effects, because it wasn't remediated properly?
Michael, I tend to not necessarily be particularly trusting when it comes to an insurance company deciding how much money they're going to spend on my health. My viewpoint may be different than others on this. But if I move it back into my home, I walk into my home and my child who's got asthma can't be in the home. They have an asthma attack and they have to use the inhaler. I'm going to call the adjuster and tell them, hey, this home's not habitable. There's no way that my family can live in this home. The smoke damage is too much. The soot damage is too much. You take the white glove test and you draw your finger across the counters and it comes off black with soot. I'm not living in this home until we get it cleaned up. So adjuster, please get your folks out here to get my home cleaned up. Then follow the next rule of dealing with your insurance company. Put it in an email, send it to your adjuster. It's in black and white in their file. Now remember, insurance companies have 14 days when you write them to acknowledge your communication, 21 days to respond. So if you talk to them on the phone, it's he said, she said. Adjuster doesn't have to be a bad guy. They could just hang up the phone and immediately pick up the next person and forget about the conversation. But if you've emailed them, the clock is ticking, the email is in their inbox. And by being in the inbox, it also helps the adjuster calendar, because that's what they do. It's in the inbox, a calendar entry is made. They now have that 14-day reminder. They now have that 21-day reminder. And they know they've got to act on your coverage to clean up your home. How much I trust the insurance company? I'm going to be there. I'm going to be there. I'm going to be looking at what they're doing. I'm going to talk to the contractor. I'm going to look at their scope of work, the contract they're proposing. Along the way, I'm going to stop in. I'm going to see what they're doing. I'm going to make sure I'm satisfied that what they're doing is good enough for me. I'm going to ask them questions that are kind of hard questions. Hey, I've got insulation in the walls of this house. And you know what? There's vents that allow air to get into that space. I've got insulation in my attic and it's a ventilated attic. How are you going to deal with that insulation? What's your plan? What are you going to do about that? Jump online and you're going to find there are a lot of resources that tell you that insulation needs to be removed. It needs to be replaced. I've had plenty of fights with insurance companies, with PG&E, other utilities who caused fires where they say, oh, that doesn't need to be done. Absolutely, it needs to be done. This is my home that didn't smell of smoke, where my family could come home and live safely and comfortably and not smell like they're next to a campfire. Yeah, you're going to take care of that. And I'm going to put pressure on them to make sure that they do the right thing. And if you get to as you're going through the process, if you're unhappy about it, phone, email, use both to stay in contact with your insurance company and make sure they know along the way, I'm not happy with this, and I'm not going to accept the C student work that you guys are delivering right now. Now, hopefully, that's not the way it goes. Hopefully they have good contractors and they do good work and they satisfy you. But if not, speak up. You have to be your own advocate. Nobody can just be trusted to do the right thing. That's unfortunately just a rule of life, as we've all found. If people could be trusted to do the right thing, your homes wouldn't have burnt down. You wouldn't be underinsured. You wouldn't be in the position that you're in right now. So with that little ray of sunshine on my view of kind of the process going forward, Michael, I'd like to jump into an additional coverage. We're almost done with the coverage stuff, so we can get to your individual questions. But another question another kind of coverage that you've got that's not going to be usually in your declarations page is trees, shrubs, and other plants. That's typically fixed by a percentage of your dwelling, your coverage A, we've called it, your dwelling limits. But there's typically a maximum amount per tree, shrub, or plant, meaning like we will pay $300, no more than $300 per tree, shrub, or plant. That's not an unusual limit. 150, that's not an unusual limit. So you may have coverage for the beautifully landscaped yard that you had, but that huge palm tree that you paid $5,500 for is going to be reimbursed at $300. Keep the inventory. You're going to do an inventory of your front yard. You're going to do an inventory of all your plants. You can use that in your third-party recovery case. We've got vendors that work with us that will literally take satellite images of your property, scary as it may be. There is satellite imagery of your yard that they can use to count trees, to count shrubs, and they can get pretty not close to the petunias, but they can get pretty close to all of the ground cover that you've got, and they can help you get most of it, and then you kind of fill in the pieces that aren't in that satellite imagery, and you can tap and get the maximum on this coverage. And for an example, Michael, from folks that we have helped, I can't think of any folks with insurance where we have not gotten them their 100% coverage limit on the tree, shrubs, and plants, right? It's just something where it's money, it's there, and with a little bit of work, if you've got this coverage, we can help you get it, right? Same thing when it applies to things like the cost to rebuild your home. Unfortunately, most folks are underinsured. We help our clients that we represent to get the maximum coverage they can for their rebuild. And then we pursue the difference from those responsible for the fires. And it's very typically 6-7 figures that we're able to recover for folks for their uninsured losses, meaning above and beyond what their insurance companies pay to cover. One final big coverage, Michael, that's important to people right now is their debris removal coverage. And this is one thing that we went into some depth last week. If you do a quick Google search of my law firm, cutterlaw.com, we've got a webpage, YouTube webpage where we're posting the historical seminars. You can see last week's seminar where we go into detail on the FEMA process. But the debris coverage pays for your totally destroyed home to be taken off the lot so that you can rebuild. it pays for, if it wasn't a total loss, for whatever debris you do have remaining to be cleared off so that you can rebuild.
John, so this is a good topic. I was going to ask you this because this is a big one in neighborhood chat. So people are saying, should I hire a private contractor or FEMA? And everyone's, FEMA, hey, everyone's like, FEMA's going to come and clear your lot, right? But the issue is FEMA then will take your debris removal money. So how does that work? Let's say I have $70,000 in debris removal, but my neighbor Jane Doe over here has $0 in debris removal. Where is equity? Why are they taking my 70K and not anything from her because they can't? Why should I foot that bill?
Yeah, I think using kind of the example that you had there, Michael, frankly, your 70 is not going to be enough either, right? If you were to do this privately, personally, and you had $70,000, that's not going to be enough, right? We're talking about homes that have many of them asbestos. We're talking about insurance coverage that is not enough to rebuild your home. It's in most all instances also not going to be enough to cover the debris, right? So the idea with the Army Corps of Engineers and FEMA is that you kind of crowdsource it, right? This guy has 20, this guy has 75, you put it all together, and when you aggregate it and you get one contractor to do to do neighborhoods at a time, and it's going to be multiple contractors that do this. It's not going to be just one. It's going to be multiple contractors that do it. You get that kind of economies of scale, right? Whereas it may have cost 100 or 150, to do this lot with the asbestos and everything else that's there. You can do a neighborhood at an economies of scale rate because you got one dump truck, you got one series of dump trucks, you got one CN, you got one of everything. You don't have a duplication of efforts. So, kind of the equity of it, Michael, comes in because everybody banding together gets it done. And then kind of one thing that you and I talked about last week that you thought about is, all right, let's say I do the debris cleanup, but the houses around me, they're not ready yet. And so I've gotten all the toxics off my lot, wind whips up, rain comes down, all of the debris, washes and blows from the houses next door onto my lot. Now I've got a toxic lot again. And now I've got to go back and clean my lot again so that when my family moves back in, we're not filling up with cancer because of all these toxics that are now being blown on my property from adjoining lots, right? So there's another advantage of kind of the Corps of Engineer processes. You get it all done, and it all gets done in one fell swoop, so that when it's done, and there's not cross-contamination from adjoining parcels of property.
So John, you got my wheels turning now. Okay, so let's say I have a standing house. Okay, all the houses next to me are burned. And what happens when FEMA comes in for debris removal? Because all of a sudden, when they start cleaning, we have toxins going into our yard, going into our fruit trees and everything. So do they have to remove the debris on my property too? And if so, how do you scrape 6 inches of soil around a property if you have a standing structure?
That's another disaster that's been heaped into your life, isn't it? Right? If you're one of the, and I don't know whether it's fortunate or unfortunate, in our loss, it was, our home and the entire neighborhood were gone, but the home on the left and the right survived. And when we went back and talked to the neighbors, they said, yeah, you were lucky. You were lucky that you were wiped out, because we're living in this Mad Max disaster land. And, that pissed me off when he said that. But, down the road a couple of years, I can understand where he's coming from, because he did have to deal with exactly that kind of scenario that you're talking about. And, they did rip out a lot of the trees. They did take off a lot of the soil, and do a fair remediation process, washing down the house, the roof, everything else, to clean off all of these toxins, right? So if you're fortunate enough to have survived and you're immediately adjacent to the burn field, you do have still another layer of nightmare to deal with. And again, if you've got insurance, reach out to your adjuster and ask, what are you going to do about this? What is my coverage? When does it start? Because you're going to want that information so that you can figure out to what extent am I opting into the FEMA process, or am I someone being on the edge of it, on the verge of it, that I don't need a FEMA Corps of Engineers style scrape off. What I need is my insurance company's $20, $50, $100,000, whatever it may be, to clean up the hazards that are on my property.
Got it. Thank you.
So with that, Michael, I think why don't we transition into the question and answer session.
Yep.
Before we get there, I've left the slide up. Email us. We're on the internet. Call us 888-285-3333, and we can help you out.
Okay. I'll read this one here from my homie Kai here. What if it's a lender-placed hazard insurance and neither the lender nor the insurance company are being forthcoming in providing a complete copy of policy or the declaration page?
Yeah, that's a situation that far too many people are in. They treat you as a stranger. You are a stranger under the contract, the way that your mortgage company entered into it with the insurance company that they chose to spend your money with. You're a stranger. So my recommendation, Kai, is write to your mortgage company. Make it clear to them, hey, I can't afford to be paying this mortgage. I don't have the funds for it. You need to get going right now. Actually, yesterday, you need to get going and get the policy limits paid and get this mortgage taken care of, so I'm not incurring rental costs where I'm living and also paying you, mortgage company, for the property, the home that I no longer have. And as a matter of fact, mortgage company, you not moving means that what you're doing is you're making interest money when you should be tapping this insurance money and getting that debt wiped out. So I'm going to have to go and talk to my attorneys if you keep on doing that, because that's not right. That's not the way it's supposed to work. You're not supposed to be making money off of this disaster. You're supposed to be paying the debt. Now get busy and pay that debt.
Good. Okay. Let's answer Neil's question from Lynn. Many people have concerns about toxic air quality and debris blowing around. Do you have any guesses on how long insurers will pay the ALE if your house is still standing, but you don't want to go back due to the unhealthy air quality of surroundings? So this is kind of something I had brought up before. If your house is standing and your ALE, let's say you got $1 million in ALE, right? But 6-8 months down the road here, the insurance companies are telling these homeowners, you got to get back in your house because everything's fine. It's been remediated, and we don't want to keep paying out that ALE.
Yeah, that again goes back to the golden rule of dealing with an insurance company. Contact them, let them know where you're coming from, put it in writing. Let that, tell them you need their coverage determination, you need their position, you need them to tell you, what are you going to do? What do you think your obligations, insurance company, are under my policy for me, given these completely legitimate concerns, right? Unfortunately, one of the things that we're seeing coming out of the Maui fires, where we're helping a lot of people, is a lot of people are coming down with all kinds of ailments. People that were in the burn zone who re-entered the burn zone. You've got NIH, you've got private institutions that are studying all of the chemicals that people were exposed to, PCBs and others that are known bad, terrible chemicals that we're only really starting to get an understanding of what harm they cause. If you're somebody who's concerned about that, absolutely follow the golden rule. Contact your insurance company, talk to your adjuster, follow up with an email saying, I want to stay out of there until it's safe for me to go back, until all the debris has been cleaned up, until my home's been cleaned up, until all this stuff's gone. I'm not sure what the insurance companies are going to do in this fire about that. The level of data is building up about how bad the exposure is. And the only way we find out what they do is by telling them, hey, it's time for you to step up. Please cover this.
Right. Another question by Kai. What if the renter's policy clearly says $100 max out? But Kai, you may want to explain that one, or do you have that, John?
I'm not entirely sure what that means.
Can you clarify that, Kai?
Yeah.
And then I'm gonna go, while he does that, I'm gonna go to Lynn's.
Yeah.
Again, so after repairs, will we be able to move in, but air quality might be bad and debris may still be there? Okay, so this is another good question here. So the house gets repaired. And again, your ALE, you got this great ALE policy. But while your house is repaired and remediated and they said move in, let's just say another rainstorm comes, in 10 months, washes all this debris down onto the property, or wind kicks up and you start to see soot on your roof. What do you do? Call the insurance company again? How do you forcefully tell the insurance company, hey, listen, I'm not going to move in until everything's cleaned up? All right. It has nothing to do with just my house, because it's the air quality that's bad. So how do you handle that? And wait, one last thing, because there's another question here, John. What if your house is standing, but has so much soot and ash, and it's in the walls? Is there any way to just say cash out, and say, hey, insurance company, pay me for a replacement cost because I can't go back to the structure, no matter what you do to remediate it?
Yeah, so taking those kind of in backwards order, your last question first, your insurance company is going to fight you if you're saying, hey, my house is so dirty, you just got to rebuild it. There are portions of your insurance policy with different coverage and different limits for a reason. While I definitely advocate for getting everything you can from the insurance company because you bought the policy, you also have to live within reason on your own end. And so, yes, be an advocate, tell the insurance company, hey, I want to come together with a plan so that you don't have to remediate and then come back and remediate and then come back and remediate as everybody else who was completely burned out is raising dust and ash as they do the Army Corps of Engineer process. But I want to know, insurance company, what is your plan for dealing with my home and my coverage, given that directly next to me is this wasteland of completely burned out homes that in 6 months, 8 months, 9 months is going to be going through the Army Corps of Engineer process. How do you plan on maximizing my insurance coverage so it's so you don't deplete my my debris coverage, my remediation coverage, before I can actually move back in? Golden rule of insurance, right? Call them, ask them, write them, get a written plan in place. Really, the only way that you can be satisfied with the outcome is by being an advocate and raising those issues that concern you. Because I'm with you, that's a very reasonable concern. And putting a plan in place that you can agree to is the best way to make sure that you're satisfied with the path you go on going forward.
And for that question there, Lynn, too, and for everyone out there, I think one of the important things is to document, like John says, you make the call, but confirm the conversation in an email back to the insurance company. Because truthfully, I mean, you look at 9/11 and they're finding out now that people in that toxic zone are getting dementia now. There's all kind of health effects. So we don't know whether you're at the Hearst fire, Eaton, or the Palisades, what's going to come down 5 or 10 years down the road. If the insurance company has you get back in your house sooner than you think you can, there's nothing you can do about it. You document it, because 5 years down the road, if you've documented, you may be able to have proof that this respiratory illness was really, the insurance company got me back in this house, and they could be third-party liability. I don't know if that's just my legal wheel spinning there, John. Any idea about using that there?
This is really kind of an unfortunately brave new world, Michael. We really are only now starting to get a true deep understanding of the health consequences of these completely decimated cities by wildfires, right? And the people in Maui, there's studies coming out fairly frequently now. CMS, the Centers for Medicaid Services, just came out with one that they released today, where they're studying the people that were in the burn zone and finding that there's a lot of disease. There are a lot of ailments that we don't understand, and they're starting to draw those connections. So it's something where the law is developing, and which makes it hard for you because you don't have clear black and white medical connection. You don't have clear legal obligation. Put the information in the insurance company's face, put it on their desk, give it to them so they know what they're dealing with and what your concerns are. And then you're going to be kind of in your best situation to negotiate the best outcome for you.
Right. Okay. From Diego, what is the difference between a rental dwelling policy for a single family home and a homeowner's policy for a primary home? Does the rental dwelling have the same rights? Or does the rental dwelling policy has the same rights? That's what he said. Yeah.
Well, the rights that you have on your rental policy are going to be limited to what's inside the policy. And typically, the rental policy doesn't cover personal property. You may have bought an endorsement to add personal property because you supplied washers, dryers, things like that. But you're not going to have the same kind of principal residence destroyed. And what we talked about there, the 30% on destruction, that applies to a principal residence, right? To get the personal property payout, if you even have it on a rental property. So by the statute that allowed you to get that 30% is tied to your principal residence, if that residence was furnished at the time of the fire. Your rental policy beyond that, get it. You can read it and figure out what additional coverage you have. But a lot of the remedies for principal residences don't apply to rentals.
And so I think that's the last question here. But if anyone has any more questions, please feel free to ask. I have a question here for some of the business owners who suffered losses in the fire. What if you're a business owner and you lost most of your inventory? How do you deal with that right there? A big pharmacy was lost, cleaners, food, liquor. You can go down the road here. Eyeglasses, sunglasses. How do you take inventory and all that? Obviously, you probably have a list, but how do you try to make yourself whole from that, from the business perspective side of things?
Yeah, the hope there is that you've got insurance, but again, you're probably underinsured, which is where the third party liability comes in particularly important. I mean, my experience is that businesses have a pretty good handle on what their inventory is, so they can, with some work, get a very specific list of what it was that they lost. As far as the inventory itself, the building is something that we can help with vendors, with contractors. But you as a business owner have the same right. Nobody gets to take your property without compensating you for it. So if it's Southern California Edison, and we're talking about a utility caused fire, or Palisades or Hearst or anybody else, nobody gets to take your property without compensating you for it. And you're entitled to pursue those responsible for causing the fire or the extent of the fire.
There was another question here, but raised their hand, Paul Otteson. Can you just put the question, Paul, in the box, in the question box? Or you can send me a text right quick and I can answer it. Oh, here's this question. Okay. What if you had a studio in the basement and you need it to work and make money? How do you cover that loss? If you have a residence, and then you had a portion of your residence that was used for business purposes.
Yeah, this is one we come across all the time. There may or may not be coverage for you under your personal homeowner's policy. We'd want to know, if you bought your homeowner's policy through a broker or an agent, what did you tell them? Did you tell them, hey, I'm using my basement for my business, and they got coverage for you for that business? Did you tell them that and then they didn't do anything with the information? Um, that will impact the coverage that you have or don't have, and also will impact whether or not maybe that broker or that agent messed up and they're responsible for reimbursing you for those losses. Right? Your business is burned out, your business is shut down. It's going to take you some period of time to find somewhere else and to get the lights back on, the desk back up, the business back running. You're going to lose income during that period of time. We help people all the time with recovering lost income. It's relatively straightforward to figure out what that income loss is. And whoever's responsible, whether it's SCE, whether it's over in Palisades, that loss is a compensable loss.
Right, and that's a good point actually, because a lot of us, ever since the pandemic, started working at home. For example, I have a law office, a physical one, but I also work out the house and work out the car lot. So I lost a lot of things in terms of equipment, let's say for my show, for my law practice, different businesses, like, laptops I would use for business purposes. So for those out there, FEMA, actually, when you go through the process with FEMA, they will do your personal loss, but then also your business loss. And if you are self-employed like myself, you get another correspondence where you have to prove you're self-employed, which tax return, etc., and a declaration that you were self-employed. So I bring that up. So when you go through the inventory that John and Margot and Brooks have talked about, and they have the forms and they've gone through this process before, you may want to separate out what personal items you have and then your business items that you had at your house as well.
Absolutely, and thank you for bringing up the SBA, the Small Business Administration. Also, they have loans to help you get your legs back under you. FEMA has funds available. That's absolutely a valuable resource, and we talked about that last week. So go to our website, cutterlaw.com. Go to our YouTube page. We have the video up of last week's seminar where we have some of the resources that you can reach out for. And Michael, if you can give me just a few more minutes, there's one huge loss that I would be remiss if I didn't talk about, and that's the impact of these fires on everybody watching, your neighbors, your friends, your entire community, the impact of these fires on you as individuals. One of the largest losses, I don't care if you had a $5 million house, one of the largest losses that you're going to incur in this fire as a result of this fire is the hit and the loss to you as an individual, as a person, the emotional distress, the anger, the frustration, the loss of your community, your friends and family that are going to move away. All of that is a tremendous loss that will be with you for the rest of your life. You can rebuild your home. You can have 100% rebuild, and the friends and family that are no longer here with you, whether they passed in the fire, terrible death that would be, or simply they moved because they couldn't afford to rebuild here or otherwise. You're losing a lot of the community, the society, everything that you counted on. And if you've got children, you're watching your children go through this recovery, and you're probably seeing kind of some of the stressors on the children, the acting out, play where fire, running from a fire is now a part of it. We've seen children that wet their pants, they can't sleep, they won't go to bed unless they're in bed with mom and dad. They've got the separation anxiety. All of that is a tremendous loss that will be with you and that you're entitled to achieve compensation for, whether it's from SCE over at Eaton or whoever we end up pursuing in the Palisades context. That is a huge loss that you absolutely deserve to be compensated for. And I'd be remiss if I didn't mention that as something that we can absolutely help you with. And we've helped thousands of people recover billions of dollars over the years.
Okay, but here's one more question. What if someone's house was appraised, was really a two-story house? So let's say it was added on a second floor, but the insurance company appraised it when they went there to do the inspection before the policy was affirmed. What if it was appraised as a one-story house? And now the payout's coming based on that one-story house and not the value of what would have been a two-story house. What do you do? Is that a big fight? Can you discuss with the insurance company, or is that going to be a lawsuit right there?
That's a big fight. There is a significant statutory protection for insurance companies for undervaluing your loss. This is something I know very personally. We had a large national insurer come out, walk the house, see everything that was in the home. It was less than 30 days prior to the fire, and they significantly undervalued it, and they were protected. So there is a significant statutory protection. That having been said, the insurance company may be protected, but the question is, who else is involved in that process? What representations were made to you in that process? They may be one of the groups of people that's protected, or they may not be. And we really would need to get in and see the facts and circumstances. That's unfortunately far too common, and that statutory protection far too great, and no surprise that it keeps happening if you can do it and not have to worry about the consequences as the insurance company.
Okay, here's another, this is why I love the law here. Here's another little nuance. What if they never went to the house actually? And it just appraised it, I guess from Google as a one-story house.
That again is kind of is the norm, right? The norm is that they don't go out to the house. The norm is that they just pull data from a tax assessor's website. They pull a satellite image. The protection there is pretty broad, but we would have to see kind of what the facts and circumstances are, who you dealt with, and what representations were made, right? The fact that they didn't come out and appraise it, unfortunately, it doesn't markedly change the circumstance.
Right. And I know you've talked about this before, and so sometimes it's not just the insurance company who may have liability, it's also the broker and the agents as well. So, you may want to discuss that, down the road with legal, like Cutter law regarding, any negligence or any misrepresentations by the broker, especially if you have a horrible policy.
Yeah, absolutely.
So, any other questions before we wrap up here? We will have another one next week. We will give more notice because I just realized what the hot topic will be for next week. So check on social media, the Cutter Law website, check on lafireking.com. But I think this is going to be a hot topic here because it's something that I see coming more forefront, and it's what my specialty is, fraud. So John, Margot, Brooks, thank you so much. See everyone next week. Hang in there. Any last bits of encouragement, Margot or John?
No, Michael, I think the most encouraging thing is seeing people like you step up and help their neighbors, take their personal time to connect their neighbors to the information that they need. Seeing how a community comes together and people come together to help each other through this is to me the most heartening thing about watching the rebuild process. We saw it with our neighbors, and I'm really thankful that you're there for your neighbors.
Great, thank you. Thanks, Margot. Anything?
No, I would just echo what John said, which is, it's easy to focus on all the bad stuff, and that's what we're focusing on, but, also try and take strength in all the good things that are happening, and it'll hopefully get people through this really horrible experience.
All right, well, thank you. Thanks, everyone. Stay tuned for next week. We'll figure out another date, our 5th virtual town hall with our experts here and get back out to you guys. So hopefully you guys can attend that and spread the word as well, especially for the other fires, the Eaton and the Hearst fires as well.
Thank you, Michael.
Thank you.
Thanks, Michael.
Welcome. Have a great weekend.